May I now request CA Vivek Jalanji to please take a very, very important session, the transitionary provisions relating to Income Tax Act 2025. One of the most confusing topic, what will happen to my TDS, what will happen to my regime, what will happen to my TCS, carry forward, sit off, n number of questions, and CA Vivek Jalan is coming with all his Vivek to deliver on this particular topic. Right. Thank you.
Thank you, Manish ji, for this wonderful session on PGBP. We'll restart from the first session and now go into transitional provisions. So we'll answer all the questions. We'll try to answer all the questions which Manish ji has also said. I think all the answers are there in the only one section. He has taken us through so many sections, but in transitional provisions, there is only one section, repeal and saving, which is section 536. And we'll go clause by clause on that section so as to understand, and to get our answers. TDS, TCS credit, पुराना एक्ट में है, कैसे carry forward मिलेगा भी कि नहीं मिलेगा, etc., etc. All of these answers are there in the transitional provisions. But first of all, friends, 2-3 things. In fact, I will start from where Manish ji also touched on notwithstanding versus irrespective. And he touched upon the fact that the CBDT has also clarified that notwithstanding is the same as irrespective, but it has said that it will not put this into the act. I'll read out what CBDT has said. It is to be submitted that such kind of provisions cannot be dealt by any provision of the Income Tax Bill 2025. It has to be dealt with by the courts, right? So on this notwithstanding and irrespective, CBDT is also very clear that while they feel that this is the same, but it has to be finally dealt with by the Income Tax Tribunal and the other courts. Now, what is the difference between notwithstanding and irrespective? Right? If we see the English dictionary, we understand that notwithstanding only disregards the earlier, whatever is written earlier, to the extent it is conflicting, right? But irrespective disregards the entire, whatever is written earlier in the law. So irrespective is a little more stronger word than notwithstanding. There are various jurisprudences which have developed over this, where recently also a jurisprudence developed on this in the GST space, where the Honorable Andhra Pradesh High Court has held that in one section there can be two notwithstandings, right? Whether the same will come with irrespective or not, that is required to be seen. So on this ground, you see, when the CBDT itself is claiming that there are many positions, where there are many new changes, etc., which needs to be dealt with by the courts, we need to understand on how to transit into the new Income Tax Act 2025 so that there is not much litigation which will happen going forward in the positions which we are taking. So the entire transitional provisions, all these answers, whether TDS, TCS carry forward will be there, MAT credit carry forward, how we will take those carry forward, by and large, all of this, at least the policy part is in the transitional provisions. It is clear from the transitional provisions. So we'll go one by one. 536 subsection 2, and there are many clauses starting from A, B, C, D, L, M, N, O, P, Q, etc. So 536 2A, nothing shall affect the previous operation of the repealed act and orders or anything duly done or suffered thereunder. So in my first presentation, I asked a question, in case any order is passed in the current act, whether it will prevail in the new act also. Any order under ITA 61, whether it will prevail in the new ITA 25 also. So it says very clearly 536(2) that whatever orders you get in the old act, that will prevail in the operation of the new act also, right? So any assessment order which you get in March 2026 in the new act, when in April 2026 also, that order will prevail, right? Very recently again we have seen various decisions of the courts which says ki in case you repeal any provision in the statute, then whatever has been done in the statute earlier, that will all be gone. So this provision saves all the order. Similarly, any refund order which you get in the current act, right? Any refund order that will not be void in the new act, you will get the refund also. Now 536(2)(b on your screen, this actually sums up the entire transitional provision, repeal and saving. If you do not get any answer to your question, right, as Manish ji ended, somebody asked a question, what about the partnership deed, right? Whether we have to change 1961 to 2025 in our partnership deed or not, right? So this 536(2)(b, that gives the overall answer. We will go one by one again and try to answer it. But if you do not get an answer anywhere, 536(2)(b is where you get an answer. Nothing shall affect any right, privilege, obligation or liability acquired, accrued, incurred under the Repealed Income Tax Act or orders under such Repealed Income Tax Act 1961, right? So, void that partnership deed, to answer this question, void the partnership deed which was made when 1961 Act was operational. Whatever right you got to claim a deduction for partner salary, to claim a deduction for interest paid on the capital of the partners, etc., all of those rights will keep on accruing to you, whether or not you change 61 to 2025. So, to answer the question whether partnership deeds need to be changed, as of now, not much required. If you want, yes, you can change it for better optics or for better operation, but as of now, no pressing need to change your partnership deeds. Whatever right you had void that partnership deed in 1961 Act, that will continue in 2025 Act. See, the provisions of the Repealed Income Tax Act, Repealed Income Tax Act, I'll say ITA 61, right? And the new Act, ITA 25. So the provision of ITA 61 shall continue to apply to any proceedings in respect of any tax year beginning before 1st April 2026, and such proceedings shall be carried out as per the procedures specified in the Repealed Income Tax Act, right? That is ITA 61. So I asked a question when I started, what happens to my assessment orders, right? What if your assessment order is relating to earlier assessment year? They have used the word tax year over here, preceding tax year, but there is no preceding tax year. Before 26, there was only a assessment year, right? So to that extent, we must consider the government's intention. So if you have an assessment order in March 2026, right, whether you will use the old form, Form 35, or the new form, Form 30, for whatever form it becomes, to file an appeal against that assessment order, this gives an answer. ITA 61 shall continue to apply to the proceedings, right? And in respect of any tax year beginning before first year, and all the procedures, all the forms, rules, procedures relating to ITA 61 will continue to the assessment orders which relate to tax years or assessment years before 26-27 tax year, right? Similarly, if you have an assessment order relating to, say, assessment year 22-23, in April 2026, what continues to apply? All the rules, forms, procedures relating to ITA 61 will continue to apply to that assessment order, right? Now, D is very important. Well, when this Income Tax Act 61 or Income Tax Rule 62 was framed and was implemented, right? I think most of us may not have started our practice also, right? And I was not born at that time. So, but always, you know, I continued whenever I was I filed an appeal before CIT appeals or ITAT, right? I always used to think that why in income tax there are two orders, which unnecessarily increases the cost of litigation. You know, in income tax, there are two orders. For any litigation, there is a quantum order and then there is a penalty order, right? Many of the times, I was deliberating somewhere. So, many of the times, I have seen that while the client has actually got a favorable order in the quantum space, but penalty confirmed, right? I myself was representing in the Delhi tribunal. There was another professional lady who was before me arguing her case. Possibly she was not a counsel, she was arguing from the client side. So सबसे पहला गलती उन्होंने किया कि ट्रिब्यूनल ऑनरेबल बेंच को उन्होंने एक वो सूता बाइंडेड appeal book de diya, right? And the bench got furious. And thereafter she argued a matter where actually the quantum order under 56(27)(a) that was in her favor. But penalty order, you see that she was only arguing the penalty order and she lost the case, right? So many of the times we see that. Possibly the question was always why a different penalty order, why a different quantum order? And if you see in this budget, they have made the amendment also in section 439, which is apropos section 270A, possibly in the earlier act. So now for all the assessment orders, we'll have quantum as well as penalty order, penalty provisions also. So you need to file an appeal against both quantum and penalty at that same time. But again, why this came? Possibly it is because of the section 297. Manish ji right now said that possibly there are many sections which we, while during our practice, have not even read earlier, right? Section 297 on the repeal and saving provision for 1922 Act. Before 1961 Act, there was 1922. So possibly this 297 was relating to repeal and saving transitional provisions of 1961 Act. We did not read it. Now, in this 297, it was stated, 297G, it was stated कि भाई अगर 1961 Act when it started, say we are in 1963. So if an assessment order was passed in 1963, the quantum order on the tax, that would be passed under 1922 Act, but the penalty as per 1961 Act would prevail, right? That is possibly because there is Article 20 of the Indian Constitution, which says that penalty as on the date applicable would prevail. That is why possibly we have a different quantum order under 1922 Act and different penalty order under 1961 Act as it started. As of now, it is all 1961 Act. That anomaly is being taken care of in this new Act, 536(2)D. Okay? Now, what does 536(2)D say? Any proceeding for the imposition of penalty in respect of any tax year beginning before 1st April 2026, tax year should be read as assessment year here, may be initiated and any such penalty may be imposed under the repealed Income Tax Act 1961 as if this act has not been enacted, right? So for assessment orders or any order, appeal order or assessment order with respect to tax year beginning before 1st April 2026, that order for quantum and for penalty would be passed under 1961 Act, right? And similarly, 536 2C says you need to file a appeal against those assessment or appellate orders under the earlier Act. When this Finance Bill 2025 was, just it got tabled, I think in February 2025 itself, we came out with our book on the Finance Bill 2025, a commentary, and we presented it to one of the very learned members of the ITAT. So I said, sir, we would need your blessings to understand this completely new regime. He said, Vivek ji, मैं तो इसको पढ़ूंगा नहीं, अभी 2-3 साल में मेरा रिटायरमेंट हो जाएगा और उसके बाद I will not touch this new piece of legislation. 1961 is sufficient for me, right? So till you go to the ITAT, right, for tax year 26-27, if at all, the assessments will happen, say, in 28-29 or 29-30, start in the very beginning. So till that time, 1961 Act, all the appeals, etc., you need to keep filing under 1961 Act only, right? Any proceeding, 536 2E, any proceeding pending on the commencement of this Act before any income tax authority or any other authority constituted under the repealed Income Tax Act, appellate tribunal or any court by way of any application or appeal, reference or revision or by any other means shall be continued and disposed of as if this act has not been enacted, right? So the disposal will also happen under the 1961 Act. Now say you have filed an APA, advanced pricing, for advanced pricing. So you have filed it now. We know advanced APAs happen for 3 years at a time. So whether that advanced pricing order will happen under the 61 Act or 25 Act. 536 2E says it will happen under the 61 Act only. Now Manish ji was asking a question. I also asked the question in the very beginning कि भाई हमने जो new selection किया है, जो new regime or old regime, whether we need to reselect, right, or whether the earlier selection will prevail. Whether new declaration in the form 10I, IC, etc. needs to be made or earlier which we have selected will prevail. 536 2F provides you the answer. Any selection, declaration made or option excised under the old Act, that will continue to be applicable under the new Act, right? But again, in 2023 budget, there was an amendment to section 72AA, right? We used to, in amalgamation cases, for carry forward of losses, we used to take positions of evergreening of losses, right? कि भाई हमने अमलगमेट कर लिया तो पहले 3-4 साल निकल गए, अब 8 साल और मिलेंगे कैरी फॉरवर्ड के लिए लॉसेस को, एवरग्रीनिंग ऑफ लॉसेस. दैट पोजीशन वाज negated in the budget of 2024 budget from 1st April 2025 कि भाई एवरग्रीनिंग नहीं, पहले अगर 4 साल चले गए और 4 ही साल मिलेंगे कैरी फॉरवर्ड के लिए. सिमिलरली इफ यू हैव मेड certain choices, if you have gone into the new regime, then switched once into the old regime, if you are having income other than salaried income, and under the earlier, in the repealed Act, 1961 Act, you could switch your regime only once. You have exhausted that option. There will be no evergreening of options. तो वापस से क्योंकि नया एक्ट आ गया, पुराना जी repealed, right? So it is repealed, it is gone. Whatever I did, now evergreening of options, that position is negated under 536(2)(j, right? Also 536(2)(b, as I said, आपके लिए, right? If it is applicable for you, 536(2)(b, any right, privilege, obligation or liability which you incur in 1961 Act, that will carry. So department के लिए भी तो वो है, right? So you have already exhausted that option. You have already have an obligation of not switching again. So that will continue to apply under 2025 Act. Okay, I asked another question in the morning. I will answer that now. Refunds and interest on refunds, right? If your refund is sanctioned for earlier assessment years in say April 2026, right? So for April, interest will be calculated under which act, and before April, that is till March, interest will be calculated under which act, right? This 536(2)(g gives you the answer. Where in respect of any proceeding relating to any tax year beginning before 1st April 26, a refund falls due after commencement of this act, default is made after commencement in payment of any sums due under the proceeding, the provision of this act relating to interest payable by central government on refunds and interest payable by the SSC for default shall apply for the period after commencement of this act. तो दो टाइप से इंटरेस्ट कैलकुलेट करेगी गवर्नमेंट. 31 मार्च के 26 के पहले ITA 61 पे इंटरेस्ट कैलकुलेट होगा और 31 मार्च के बाद ITA 25 में रिफंड कैलकुलेट होगा. बट दैट इज नॉट वेरी इंपॉर्टेंट फॉर ऑल ऑफ अस. व्हाट इज इंपॉर्टेंट इज उल्टा. व्हाट इफ यू हैव टू पे इंटरेस्ट फॉर एन अर्लियर टैक्स ईयर, राइट? Say you have to pay an interest for assessment year 25, for assessment year 26-27, right? Say you pay the interest on 30th June. Manish ji was just talking of chaos, right? Chaos, which will happen. तो अब आपको दो चालान डालनी पड़ेंगी, right? So whenever you are paying interest before 31st March 2026, interest which you pay has to be in the old act, and after 31st March, that is from 1st April, interest will be under the new act. So friends, two different chalans. Any default is made, see 536(2)(g) 2. In case any default is made after commencement in the payment of any sum due under such proceeding, the provision of this act relating to interest paid by central government and interest payable by the SSC for default shall apply for the period after commencement of this act. So पुराना पुराने में, नया नए में. No, that is different. वो तो है ही. Q1, you are talking about Q1, right? Q1 of 26-27, वो तो नया एक्ट में होगा पूरा. या सो या तो या तो सपोज से मार्च 26 इज नॉट द राइट एग्जाम्पल, क्योंकि मार्च का तो सारा इंटरेस्ट अक्रू कैलकुलेट होगा फ्रॉम 1st April, राइट? दैट विल बी अंडर द न्यू एक्ट. बट से यू आर पेइंग इनकम टैक्स फॉर financial year 25-26, right? A due amount which was due to you which you are paying. So interest, suppose आपको advance tax के ऊपर interest है, अगर आपको payment करना था June 25 में, आपने payment किया June 26 में. So till 31st of March, old act will apply. After 31st of March, interest will be under the new act. Rate is the same, right? There is no change in the rate. But then for the new period, you need to pay under the new section. And for till 31st March, you need to pay interest under the old section. That is what 536(2)(g) says. Yeah. Two challans. Yeah. No. He's talking about advance tax. Self-assessment tax. Tax, we are not talking about tax. Tax has to be paid under the old challan. Till 31st March, old act. After 31st March, new act. That is what 536(2)(g)(2) says. So if again, return is calculating, let us see how these forms online it comes, right? If the system is calculating, system is providing, and system is generating two challans. If they follow this 536(2)(g)(2), they have to generate two challans, right? And you have to pay under two different challans. Because from 1st April, whatever interest accrues to you, that is under a different section. It is not under that 234A, B, C, etc. But see, again, when you are paying, say you are paying a tax which was due to you, but you have defaulted for any reason. So there, till 31st March, old challan. After 31st March, new challan. Until and unless they come out with a, removal of hardship circular. And I will come to it. They have another provision where they say any recovery under the erstwhile Act, 61 Act, can be done under 25 Act, right? Any recovery of tax interest of earlier Act can be done in the Act, current Act. But vice versa, they have not specified that any payment under the earlier Act can be done under the new Act, right? So if you need to pay anything, we have seen so many demands that, oh, you have not paid under the right section, please pay under the right section. So many disputes are there. So these procedures of paying under different challans, that can create another one dispute until and unless a circular or notification comes. So as Manish ji was saying, from 1st April, while there may not be many policy changes, but this procedural, you must be very, very careful. If you pay under the earlier Act, the whole interest, maybe tomorrow the demand under the new Act, the corresponding section, that may not be vacated. And to that extent, your interest will continue to be due. So we need to be very, very careful as consultants, wherever we are making any payments, any procedures, filling up any challans after 1st April 2026. No. Tax is for earlier tax assessment year 26-27. So that is not a problem. We are talking about the interest. Two different challans. Yeah. The interest you are paying for two different periods. Please again, let us read again. We'll read only the select portions. Where in respect of any proceeding, proceeding means assessment. Assessment includes self-assessment, right? Where in in respect of any proceeding relating to any tax year beginning before 1st April 2026, default is made after such commencement in the payment of any sums due under such proceeding. Interest payable by the assessee for default shall apply for the period after commencement of this act. अब टैक्स या ये टैक्स ईयर की जो बात कर रहा है, in my view that has to be read as financial year or assessment year also, क्योंकि टैक्स ईयर की बात ये पूरे सेक्शन में कर रहा है, where it should be talking about financial year or assessment year. Okay, let us move forward. Where any deduction has been allowed or any amount has not been included in the total income of any person subject to the fulfillment of certain conditions for any tax year beginning before 1st April 2026, and in case of any violation of such conditions in any tax year beginning on or after 1st April 2026, any such sum on account of deduction earlier allowed or amount not included was required to be included in the total income of such subsequent tax year under the Repealed Income Tax Act. If it had not been so repealed, then such sum shall be deemed to be the income of that year in which such violation takes place and included in the total income of the said person under the said same head of income as it would have been included under the Repealed Income Tax Act. Again, this answers to some extent the earlier interest issue also. See, let us understand by means of an example. Section 54, as I said in my earlier deliberation also. So, you have sold a property in the financial year 24-25, assessment year 25-26, right? And you invest such amount into capital gain scheme account, right? But you fail to construct a new property for 3 years. Your violation happens after 3 years, right? Now, after 3 years, as per that section 54, you have violated section 50 conditions under section 54, 54F. So that should be your income to the extent of such violation. The amount which you could not utilize for construction, that should be the income of that financial year or tax year, right? But in that year, the violation is actually repealed, right? The earlier act is already repealed. So here they are providing an express solution to you, express provision, that it should be included in the total income of the said person under the same head of income as it would have been included under the Repealed Income Tax Act, right? So they are telling you, you will use the same long-term capital gain head of income, what it becomes in the new Income Tax Act. But interest, they have not told you this. They have not told you pay interest under the same provisions as was there in the Repealed Income Tax Act. That is where I draw my interpretation from, right? Here they have given you express provision which you can use, but there is no express provision. Why? Tax year 26-27. For interest they are not saying anything. Yeah. Interest they are not saying anything. So here again, in case a circular does not come for tax, no problem. You will be assessed, under the same head of income. But interest, again, they are not saying any such thing. Okay, now this is very critical. Okay, see, the ministry, to all the credit to the ministry and CBDT, if you get some time, please do read the select committee recommendations. No need to read the entire, it is a 4,500 page document, but they have made a concise recommendation also, right? 14, 15 or maybe 20 pages, right? Friends, whatever recommendations we have made from various associations, including the institute, chambers of commerce, etc., they have either made corresponding amendments or they have specified why they have not made such amendments, right? The select committee has given its opinion. If the ministry, the CBDT has not accepted the opinion, they have specified why they have not accepted the opinion, like in notwithstanding versus irrespective. So there was a clause, I will take you through that clause, right, to reflect upon this. While we do talk about so many issues, etc., we should give due credit. See, there was a clause, if you see I have got this Financial Express media coverage also. There was a clause 263. So 139, current 139 becomes 263, return filing. So if you see, this is the original 263 1A. The following persons shall furnish a return of income for the tax year under the Act on or before the due date. 9 says a person who intends to make a claim of refund under Chapter 20. So if you read this word due date with this clause 9, it seemed that if any taxpayer has not filed its return within the due date, it could not claim its refund under Chapter 20. So we brought it before the CBDT, and this clause 9, if you see the current 263 1A 9, it is not there. It was deleted when the Act was framed, right? So this is a amendment which the CBDT did take into consideration and did make. But again, I will take you to something which the CBDT has done just the reverse, right? So we put this up from chambers, etc. See, if you see in red, this word circular, this was added. If you see the income tax bill 25 vis-a-vis Act, this word circular is added. Now I will read this and I will explain to you the implication with means of an example. 536(2)(j) says, any agreement entered into, appointment made, approval given, recognition granted, circular direction, instruction, notification, order, rule, issued under the provision of the repealed Income Tax Act 61, shall, this is very important, insofar as it is not inconsistent with the provisions of this Act, that is 25 Act, shall be deemed to have been entered into, made, granted, given, issued under the corresponding provisions of this Act and shall continue to be in force accordingly. Now I will read only this circular. So any circular issued insofar as it is not inconsistent with Income Tax Act 61 shall continue to be in force, right? If you read the word circular standalone, this is the meaning. Any circular which is issued in 1961 Act, all circulars will prevail in the 2025 Act, right? But they should not be inconsistent with the provisions of 2025 Act, right? Now I will take you to Circular 12 of 2022. Manish ji was just talking about 26(4), right? 28(4). What is 28.4? We got to know this section only after TDS under section 194R came into being. 194R TDS is a 10% TDS on perquisites or benefit, right? It requires that the deductor who is providing a benefit to a deductee shall deduct 10% TDS under section 194R. The deductee should disclose such corresponding income in its income form PGBP under section 28 clause 4, right? The question arose whether a post-sale discount, right, issued by means of a commercial credit note, that would be considered to be as a benefit or perquisite. It was answered in Circular 12 of 2022. If you see question number 4 in that circular, it clarifies that post-sale discount is also a benefit and section 194R TDS should apply on post-sale discount. However, to ward off any hardship on the taxpayers, vide that Circular 12 of 2022, such post-sale discount was not liable to TDS under 194 capital R, right? 194R says TDS of 10% should apply on post-sale discount. Circular 12 of 2022 said should apply, but to ward off hardship, we grant a exemption, not required to apply TDS under 194R on post-sale discount. I am sure all your clients would be issuing or getting or anyway dealing with these commercial credit notes for post-sale discount. Friends, circular is in, so this 194 capital R, it becomes section 393, subsection 1, table number 1, clause 8. TDS on perquisite or benefits in that table, that is those are the words which are written 10%. Circular 12 2022 is in conflict with the new section 393(1), table number 1, clause number 8 for perquisites or benefits. So again, you need to take a call whether from until and unless it was discussed with the CBDT. This was discussed and the CBDT had said that they would come out with a detailed list of circulars, etc., that if were passed in 61 Act, which will continue to apply in 2025 Act. So if they come out with a list of such circular, they come out with a notification accordingly, that Circular 12 2022 would continue to apply in ITA 2025, right? If that comes, it's great. Then you continue not to deduct TDS under 194R. If that does not come, then in my view, that circular is inconsistent with 2025 Act, and TDS under 194R from 1st April needs to be deducted on post-sale discount also. Now similarly, while filing an appeal, that 20% pre-deposit which is required, right, that is not by means of the Act, right? It is only by means of an instruction. So again, instruction is in conflict with the Act. So similarly, in case that instruction will prevail in ITA 25, that again needs to be seen, right? Whether any recovery made under that instruction by the department that would continue to apply, that needs to be seen. So this 536(2)J is something which we represented. We represented on these lines that, see, if this all of these circulars continue to apply, so you need to come out with something on this. So they brought in a word circular also in Income Tax Act 2025. While again, we might, in fact, 2 months back, in one of our clients, there was a survey, and they have taken a position as per that circular 12 of 2022. But you all know, always this commercial credit note for post-sale discount, there is always a dispute with the department that whether it is a discount simpliciter or whether it is a service which you categorize as a discount, right? That is always a difference of opinion, where the department alleges that no, it is a service. You have given a commercial credit note where actually you should have given the other party should have raised an invoice. So that dispute is still surfacing with the income tax department, not the GST department. That is still surfacing with the income tax department. So already these commercial credit notes, they are, to an extent, there is a difference of opinion with the department. In case this notification clarifying on the implementation of circulars do not come, this provision might have some consequences. Hundred % post-sale discount. Even there is a Madras High Court judgment in the case of Supreme Paradise, which if you go through that judgment, that very beautifully it explains this, that where it is a discount simpliciter, as per the agreement, it cannot be converted into a incentive or a service, right? But there are circumstances in which the department contradicts this. As of now, until unless there is a new notification which either gives a blanket, it notifies that all circulars will continue to apply, or they come out with a list of circulars which continue to apply, and this 12 of 2022, that circular is also there, right? In fact, in case those of you who have not dealt with, most of the deductors, right, they were deducting TDS under 194R on commercial credit notes before this circular has come in June 2022. So next, K, 536(2)K, where the period provided for any application, appeal, reference, revision under repealed Income Tax Act has expired on or before commencement of this Act, nothing in this Act shall be construed as enabling any such application, appeal, reference or revision to be made under this Act by any reason, or by reason only of the fact that a longer period is prescribed or provision is made for extension of time in suitable cases by the appropriate authority. So this simply says that while this is not much applicable now, because all timelines of the erstwhile Act, they continue to apply in ITA 25. But in case there is a longer, if there is a application or appeal which needs to be made in ITA 61, but which you make after 1st April, then ITA 61 timeline will apply, ITA 25 timeline will not apply. Okay, this gives, now next 2-3 provisions, it gives few of the answers which were asked. MAT credit. Any MAT credit in your earlier Act, so the MAT credit which you carry forward in your income tax return for assessment year 26-27, which you file in September, October, etc. That MAT credit, the question is, whether it will flow to ITA 25 or not, right? So the answer under 536 2L is MAT credit of earlier act that will flow into the new act. Now the bigger question is procedure. How? Whether the income tax return which you file for assessment year 61, from there itself it will flow to the new income tax return of ITA 25, or there will be a transitional form, or in the income tax return of 2026-27 assessment year, there will be a new schedule which will require you to carry forward all these credits, MAT, TDS, losses, etc. That needs to be seen as the income tax return of assessment year 26-27 is notified, right? But one thing, friends, those of you who are practicing GST also, I think most of you would have dealt with GST transitional issues. If you remember in 2017 and till today, we are all contesting transitional issues in some form or the other, right? Even now, transitional disputes, they have traveled to the GST-AT, which will be formed, right? So if you remember, there was one big transitional issue in GST, that the service tax return SENVAT credit, that of the original service tax return SENVAT credit would only be carried forward in your Tran 1, Tran 2 form, right? But if you revise the service tax return, and if you filed a revised service tax return at that point of time in 2017, then the revised SENVAT credit will not flow to your Tran 1, Tran 2, right? If you remember. So my suggestion is, considering those experiences, since we have already dwelt with in an earlier implementation on this, for the professionals, chartered accountants, one very important to do is not to revise your ITR. Better, as of now, what I would say is to file a belated return rather than to file a revised return. You never know what these credits, etc. will carry forward, what will not carry forward, and unnecessarily there will be technical glitches and disputes. So prepare for your ITRs much earlier and ensure your ITRs is correct and verified. Similarly, 536(2)M, that provides for losses carry forward for PGBP, house property, etc. So this clause says all losses under PGBP, speculation, non-speculation, etc., all will be allowed to be carried forward. Any loss under house property, that will be allowed to be carried forward. But again, the procedure, the machinery for this, whether it will be old ITR or a new transitional form or a schedule in the ITR, whether it will be the original ITR or whether it will flow from a revised ITR, all of that will evolve in the next 6 months or so. So these 6 months of transition, these are very, very important. Similar for capital gain, any loss under the head capital gain under 536(2)M, that will allow to be carried forward. But again, procedure needs to be specified. Any set-off of loss or allowance for depreciation made in the tax year beginning before 1st April 26 in the hands of the amalgamated company, successor or successor limited liability partnership in accordance with 72A of ITA 61 shall be deemed to be the income of the amalgamated company, successor or successor company or successor LLP, as the case may be, chargeable to tax under this act for the year in which any of the conditions specified in that section are not complied with, right? So if you have carried forward a loss for amalgamation and thereafter you violate those provisions, then it will be taxable under the new act. Same for bank, 536(2)P. Any capital profits arising out of transfer of capital asset not charged under capital gain by virtue of 47, 4, 5, 13, 13b or 14. That is conversion of company to LLP, LLP to company, proprietorship to company, holding, subsidiary movements, etc. All of these which are not chargeable to capital gain under section 47, in future if the conditions are violated, right, then it will be chargeable in that year where the conditions are violated. Accumulated depreciation or expenditure of scientific research. Again, accumulated depreciation, same like losses, it will be allowed to be carried forward in the new ITA 25. Preliminary expenditure, 35D. If you incur any preliminary expenditure in financial year 25-26, assessment year 26-27, you get a deduction of 1/5 of the amount in 35D in assessment year 26-27's return. It will, the balance 4/5, that will be allowed to be carried forward in the ITA 25. But again, how you will carry forward, that needs to be seen. Provision for bad and doubtful debts, etc. Whether you have not taken any deduction for provisions for bad or doubtful debt, when you write off that amount as bad debt, that again will be applicable in the new regime also. So faceless assessment will continue under the new regime 536 2V, 2U. A search or requisition of documents shall continue as per the old act. So search has been conducted, survey has been conducted in financial year 25-26. It will continue to apply in the new act. Now, even if I gave you 536 2B for your partnership deeds, etc., etc., right? Right, privilege, obligation, liability, RPOL. I gave you 536 2B. If you don't find your answers anywhere, refer to 536 2B. If you do not find your answer in 536 2B also, go to 536 3. It takes you to clause 6 of General Clauses Act 1897. Whatever is written in 536 2B, that is same thing by and large is written in clause 6 of General Clauses Act, right? So all your right, privilege, if you do not find any answer, you should refer to clause 6 of section 6 of General Clauses Act 1897, right, for your transitional provisions. So this is, an understanding of the transitional provisions. I think by and large, almost all the questions to an extent were answered what I started with initially. Now we'll discuss the TDS, TCS provisions. First of all, there were many representations. Not many, I would say there were some representations to remove these TDS provisions altogether, right? You can see this is just small analysis which we have done. You see for 24-25, the last in this table, for 24-25, the total income tax collection was 27 lakh crore. And out of this, 35%, that is 9.5 lakh crore, was on account of TDS only, right? So there is no way these TDS, TCS provisions as of now can be scrapped completely. However, the representation from across was to rationalize these provisions. They have been done in the last 2 budgets. The representation from almost all the associations, chambers and institute was that TDS needs to be simplified. So now 71 sections or 43 sections, they have been merged it into one section of TDS. So overall, just a macro view before we get into basics, a little micro. There is no change in the rates or threshold. The provisions are aligned to Finance Act 25 and now Finance Bill 2026 also. Words have been reduced, we all know. Now 69 sections are there. In my view, 71 sections are there. My office has done some calculation. 71 sections have now been combined into 13 sections. So TDS, TCS, section 390 to 403 of ITA 61, right, or ITA 25, right? 3 tables, there are actually 5 tables, so main 3 tables are there under section 393. 393.1, table for TDS or residents. 393.2, table for TDS for non-residents. 393.3, tables for no deduction of TDS, right? Thereafter, there are 2 other tables. Similar payments have been clubbed, so rent, interest, commission, etc. All the payments, they are in different tables. We'll come to those tables. Scattered provisions are merged relating to certificates. You see, all the provisions have been combined together. Now, one major change, right? A major change is this. This change had come already under section 397. 397 is relating to low TDS deduction certificate. Now, if you remember, before October 2024, there was no time limit for rectification of TDS, TCS statements, right? On your traces, there were always, I think in almost whenever you file a TDS, TCS return, there are certain errors which get populated and thereafter you have to correct, right? So, from October 2024, they capped the ceiling of time limit for rectification of TDS, TCS returns to 6 years, right? So, as of now, you can rectify your TDS, TCS statements for the past 6 years. But in this new act in section 397, 3F, very surprisingly, they have reduced these 6 years to 2 years. So, after 31st of March 2026, you cannot rectify any TDS, TCS statement or return which have been filed till Q3 of financial year 23-24. So, one homework which the CBDT has given to all the taxpayers and the professionals is, please rectify all your TDS, TCS returns wherever there have been errors which have been auto-populated, wherever your clients, customers, etc. they have brought certain errors to your consideration. Whatever rectification you need to do till Q3 of 23-24 financial year, that needs to be done till 31st of March 2026, right? Not later than that. So, there was a press release also on 8th of September 2025 already. Now, again, few important amendments in section 197 currently. So, section 197 of ITA 61 is for low TDS deduction certificates or low TDS deduction applications which you file in form 13 as of now, right? Now, that 197 is the new, is transcribed to new section 395. So, 395 is on LTDS, low or nil TDS or TCS. One important change. Now, if you see again the Finance Bill 2025, you will see that Section 395. In Section 395, only nil TDS, TCS deduction certificate were mentioned, right? So if I read 395(1), where a tax is required to be deducted on any income or sum under this chapter, then subject to the rules made under this Act, A, the payee may make an application before the assessing officer for deduction of income tax at a lower rate, or no deduction of income tax as the case may be. This no deduction of income tax as the case may be, this was introduced in Income Tax Act 2025. It was not there in Income Tax Bill 2025, right? So then representations were made कि भाई आपने लो ला दिया, अब हम जब application करेंगे before the AO, then he will not grant me nil TDS deduction certificates, right? He will only grant low. So then they brought in this amendment in Income Tax Act 2025. Now, a major amendment has been brought, as you are all aware, in this Finance Bill 2026, in this budget, on this low LTDS application. Now it becomes automated, right? However, your application has to be completed. Now again, how you see many of the times, whatever you apply, whatever documents you give to the assessing officer under the current rule 28AA, they go beyond that and ask for more documents. But the good thing is to automate this Form 13, you now need to apply. Already you applied in Form 13 or online, but now it will be also granted online if all the requirements of last 4 years balance sheets, etc., are available and all the attachments are there. In this new act, the Form 13, this for LTDS application, that becomes Form 128. So a new form is there. Plus, if you see 395(5), right, on your screen, the assessing officer may cancel the certificate granted under subsection 1 or 3 after giving reasonable opportunity to the applicant. As of now also, you might argue that in case the assessing officer has got certain reasons, he can cancel your low TDS deduction certificate. But it was not expressly mentioned under 197. Now it is expressly mentioned under 395(5). So now you as a, even if you are getting a LTDS deduction certificate from your deductee, then you need to see online on Traces portal whether the LTDS deduction certificate that is alive or dead, right? Already this kind of utility is there on the Traces portal. If you see, this has come out very, very small actually. There is a column for cancellation date. So this utility is there on the Traces portal. So whenever every month, whenever you are making a payment where you have got a LTDS or nil TDS deduction certificate from your deductee, you need to see on the Traces portal whether that certificate is alive or dead, right? If it is cancelled, then you should not deduct lesser amount of TDS. Another, this is very important, this utility, it is a consumption statement also. So now you keep an Excel track that, okay, this much of LTDS deduction certificate has been given to me, this is utilized, etc. Now you can see on the Traces portal itself what is the amount of deduction which you have utilized, right? So this will give you a consumption details also. So for LTDS, as I said, consumption statement is available now. LTDS deduction certificate can be cancelled, as I said. Okay, one important change in 395 is that as of now, For 194N, for this bank TDS by banks, etc., no LTDS certificate is applicable under 197. But under 395, you can get a low TDS deduction certificate under all the, for all the provisions, all the sections. So this is a welcome move. Yeah. So I've also, okay, this kind of intimations we have started, while this has nothing to do with the new act. One change which was not accepted, as I said, there are many changes, there are many recommendations which were accepted by CBDT. One which we are representing, I think most of the associations are representing, I personally am representing before CBDT regularly since the last 3 years, is to withdraw this TDS TCS certificate issuing compliance. It is, in my view, I don't know whether all the members have the same view, but at least in my view, issuing this TDS and TCS certificate, that is a non-value added compliance. I have put it up before the ministry many of the times. Very recently, Honorable Member CBDT was there, and I put it up again from my Chamber of Commerce, Bengal Chamber. But you see, the commissioner was there, and he said, Vivek ji, ye TDS TCS certificate, that is actually a facilitation, that is a taxpayer service. I said, sir, कैसे taxpayer service होगा? क्योंकि आप तो TDS TCS हमें credit देते हो on the basis of Form 26AS. He said, see, credit you get as per Form 26AS. But in case your deductor has not made the payment to the thing, the government, then you are protected under Section 205 from any recovery or prosecution. I said, sir, the person who is not making a payment to the government, the deductor, how will he give me a TDS certificate, right? He cannot issue it from the traces portal at all. But nonetheless, it stays, and if you do not issue the TDS TCS certificate within the timeline of 15 days from the return filing due date, then 100 rupees penalty per day per certificate under 270A. This kind of this notice is now coming everywhere, right? So very soon your wish may be fulfilled. Okay. So now new forms. TAN application form, we have used 49B since ages, now it becomes 135. TDS TCS returns for salary payments, 24Q becomes 138. So in July 2026, you have to file Form 138 for salary payments. 26Q becomes Form 140. So 138, 140 you have to file. TDS for non-resident payments, some of us use it. From 27Q, it becomes 144. TCS returns from 27EQ, it becomes 143. So all of us should go through Form 138, 140 and 143 at least for TDS, TCS return, salaried, non-salaried and TCS, right? As I said, from in April 2026, when you file for low TDS deduction certificate, you have to now use Form 128 and not Form 13. Form 15G and 15H for non-deduction of TDS for senior citizens and otherwise, 15G and 15H both have become 121. TDS return cum Chalan for property purchase from 26QB under that section 194IA, that becomes Form 141. So all the chalans become Form 141, all consolidated. Chalans become 141. And Form 16, of course, it will be issued in the next year. Instead of Form 16, it becomes Form 130. Form 16A, it becomes Form 131. 16B, for property, it becomes Form 132. TDS certificate for rent, Form 16C, it becomes Form 132. And as I said, Form 26AS, that becomes Form 168. TDS TCS provisions, Section 392, it is the new Section 192. So the old 192 gets converted to 392, right, for salary employees. Now the major changes. All of us will have to start mugging up, unlearning, not unlearning, because you have to continue to remember 194C, 194J for the next few years till the assessments are not complete. So Insurance Commission, from 194D, it becomes table under Section 393(1), Clause 1, Subclause 1. Commission Brokerage, 194H, it becomes 393(1), 1, Clause 1, Subclause 2, right? So instead of 194H, from 1st April you have to use 393(1), 1, 2. Rent, 194IB, it becomes, for individual, it becomes 393(1), Clause 2, 1. Now this is again important. 194I, for plant or machinery and for land and building, we used 194I. Now you have to use two different clauses. 194I, for plant and machinery, it becomes 393(1), Clause 2, Subclause 2A. Land and building is 2B, right? So you have to, while you are making the payment on 7th of May, be careful, right? It is only, today is 5th of March, right? You have to use it after 2 months. So when you're making the payment, do not use 2A when you're making a payment for land and building. Use 2B. Otherwise, there will be an issue in your return. Sale of immovable property, 194IA. It becomes 393(1), 194LAK, these are something which we use seldom. Interest on securities, right? From 193, it becomes 393(151). Bank interest, 194A. Now bank, if you have a client, then you have to use 393(152). So interest में भी दो है. Interest on securities is 51 and bank interest is 52. So again, careful. Now this is something close to our hearts. 194C, contractors. For individual HUF, it becomes 393(1)61A, and for others it becomes 61B, right? So professional fees, again close to your heart. 194J, it becomes 63A. Now this is again critical. Professional fees become 63A, technical fees become 63B. Now most of the times there is a dispute in technical fees and professional fees. In fact, we have represented in the last year before CBDT कि भाई इसको भी आप 2% कर दीजिए, because there is always a confusion in the definition of the word profession in the 194J. They did just the reverse. And now they have two different clauses, 3A, 3B. So while making the payment in the Chalan on 7th March, May, be careful of using 3A, 3B, 1A, 1B, right? Director's fees, 3C. So director fees and professional fees use different clauses. 3A for profession, 3C for director's fees. Dividend, 194, it becomes 393.17. So again 194R, we were talking about 194R. It becomes clause 8.4 of table under 393.1. 194O becomes 8.5, virtual digital asset 194S becomes 8.6. So many others, we have tried from our office to compile most of them, still many are left. Payment to non-resident, this is another table, right? Payment to non-residents. It comes under 393.2, yes. See, I have to go through the Chalan, frankly 141 I have not gone through, but in my view, during the Chalan time, that same will continue, but possibly the way they are refining the forms, I also have to check this form 141, whether you have to do it differently or not. We represented in this Finance Act कि इसको हटा दिया जाए because we didn't see any rationale for reducing, but they have retained it. Oh yeah, this is an error. So actually our office was focusing on this. So here on the clauses, yeah. Again, there are other sections. Due to paucity of time, again, these are not very, 195, that becomes 393.217. 393, payment to any person. Again, 194N, which you use, that becomes clause 5 for table under 393.3. Partner remuneration, 194T, becomes clause 7. Similarly, there are others also. Payment to any person. TCS under 394. So TCS comes under one section 394. Again 206C, alcoholic liquor comes under one. Scrap comes under clause 4. LRS 1H becomes, or 1G becomes 7. 1H is gone, so it's not there. Overseas tour becomes 8. So happy implementation of Income Tax Act 2025. Thank you very much.
Face a lot of problems if something wrong has been done, wrong had been done, wrong Chalan number is being put, or wrong adjustment has been done. So a big round of applause, CA Vivek, Jalan, and many thanks, sir.